Hey, good morning, everybody. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics, bringing you Stock Market Today for Monday, September 14th, 2020. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where you get a lot of the content for this show. We also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities finished mixed in Friday's trading. It was a very choppy session. Industrials and materials were the biggest gainers, continuing a trend of improvement in the two favorite cyclical sectors that we've been highlighting for, well, in the case of the materials, since the end of June, beginning of July. Technology and comm services underperformed. Treasuries were stronger across the curve. Dollar weaker against the euro, but little changed against the yen. Gold down 80 basis points. WTI crude up 10 basis points on Friday. So again, your outperformers, the industrials, materials, and the financials. Underperformers, tech, discretionary, comm services. And as we get to the desk this morning, we have a little bit of a pop in the futures. S&P futures up about 1%, though off the best levels of the morning. That's following gains across Europe and Asia overnight. Came after the index. The S&P 500 was down for a second consecutive week. Treasuries are unchanged to slightly stronger at the long end of the curve. So that would lead to some flattening. Dollar is weaker against the yen, unchanged against the euro. Gold up 10 basis points, and crude oil is down 80 basis points. And crude came under pressure last week. And we'll take a look at the chart a little bit later on the show, but there is really nothing good to say, which is kind of interesting in and of itself. Let's take a look at the major averages now as we dive in. This is the structure of what we're watching. And I've kind of changed this up, you may have noticed, over the past couple of days, because I think it's important to pay attention to more than just the S&P 500. You know, for me, I like to use the S&P 500 as a trigger. It's the barometer that everybody watches for the quote unquote market, which, as many of you know, I can't stand, because the market is so much more than just 500 stocks, right? And the market is so much more than just stocks in general. But, you know, let's use that as a barometer. And then from there, we can figure out who's leading, who's lagging, who's at key inflection points, et cetera. So I think this is an interesting way to look at it. So I've kind of changed it up here a little bit. For the S&P 500, very much remains the same. We closed below 3,400 for the week, right? That's important. And the bulls want a fast retake, right? You get a fast retake of 3,400, then this was nothing more than a blip from an extended position, especially in those tech names and those growth names. And we can start to reevaluate what rotation looks like, who the emerging leaders are. Maybe the emerging leaders end up being just tech again. You never know. We're obviously seeing it in materials. We've been talking about it for 2 months. And more recently, the industrials, right? So I think as long as we're below 3,400, the odds favor 3,250. Okay, and that's simple. Then you look at 3,250, you reevaluate the situation, and you start to assess whether or not you think we're going higher here, or this is truly the start of a downtrend. I have no idea, right? It's just an odds game. And below 3,400, the odds of 3,250 increase. I mean, it just makes sense. Looking across the other averages, the Qs, the bulls want 270 to hold on the Qs. There's no two ways about it. The 50-day moving average is at 271, right? So we can go back and forth, as many did over the weekend. Did we close above it? Did we close below it? We closed below it, but okay. So far, so good. I think 270 is the key level for the Qs. Getting a little bit of a pop today. Would love to see the emergence of those big growth leaders once again. On the IWM, 150 is the key break point. So we're essentially there. I heard a great podcast over the weekend where somebody described all of these markets as having walked to the edge of the cliff, but not quite losing footing yet. And I think that's fair. I think, you know, as it relates to key levels, markets are at an inflection point. And will we lose our footing or stabilize, and all as well? Thus far, in my mind, averages remain bent, not broken. I'm sticking with that theme until it makes sense to not stick with it. So let's hit our market in a minute now. What are we writing about today in the note to clients? Well, we talked about a lot of this already. Qs and IWM start the week at key levels. They are at inflection points. There's no two ways about it. SPY has undercut its first key inflection point. Bulls want to see a quick retake. The gold consolidation continues. I think it's likely to resolve higher. That's my base case. Obviously, we have levels in mind where if should they break, we have to change our view, and that's fine. We'll change our view and then move in a different direction. That's what investing is all about. And a lot of that may hinge on the dollar, which is trying to base below broken support. We'll take a look at that within the context of gold, and we'll chat about it bigger picture a little bit later on. Futures point to a higher open, as I said today. Taking a look at the power bars now for the major indices, they sustained some damage over the past 2 weeks. There's no two ways about it. I was writing our note, our weekly note yesterday, and just kind of looking week to week, how bad it was from a ratio standpoint. What was the ratio on the previous Sunday? What was the ratio yesterday? And I mean, it was major deterioration. There's no two ways about it. The Dow added 47 basis points on Friday, 6-2 bulls to bears, but they are still bullish. S&P 500 flat on, let's just call it flat on the day, 132 to 89 bulls to bears there. NASDAQ and small caps are your underperformers, 20 to 14, 593 to 336 bulls to bears there. And that is some massive deterioration in the small caps. Bonds uptick, sending yields lower. Industrial is one of your best groups, up 1.3%, 16 to 11 bulls to bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major markets across the board are mixed. It's at our stock of the day. I'm really, it's tough. It's interesting. I wrote our note yesterday, as I said, and I featured two groups of stocks. I featured oversold, kind of beat up, but still in uptrend growth in tech stocks. And then I started featuring stocks in the materials and industrials. And Masco is one of the ones that jumped out at me. I didn't use it as my stock of the week in the note yesterday. Actually, I'll show you what I did use. But Masco, I'm highlighting in my note today. I think it's kind of interesting here. Consolidating, outperforming, seeing a spike in the outperformance, right? So we have a bullish stock, strong trend, strong industry group, outperforming. Rating actually turned bullish. We're seeing the intensity of outperformance pick up. Now, we've had persistently bullish money flow. It's flat right now in the near term. Would love to see that begin to move in the right direction. As well, triggered one of our buy signals today. I go through this in our note. I also give you a list of all the S&P 500 stocks that are bullish and triggered buy signals today. That's in my note today. That's interesting. Take a look at it. But Masco is interesting to me. I think it's pretty compelling here. You can make the case that as long as we are kind of in this buffer zone, let's call it, 52.5 to 55 for now. As long as we're above those levels, Masco kind of looks interesting. And what's interesting to me is that everyone's looking at the builders and the supply chain. Well, here you go. I mean, this is the supply chain to the builders. So if you believe in this theme, right, low rates, housing, people leaving major cities, going to the burbs, people, home improvement products, Masco sells, the picks. You know what I mean? Right? You can invest in the gold miners, or you can invest in the people who sell the equipment. Masco sells the equipment. Take a look at this name, MAS. Really interesting name. For those of you who are doing some projects, Masco makes bare paint. You see it at Home Depot. Delta faucets, right? You see them everywhere. Those are Masco products. Take a look. Let's look at our sector tracker now. Movement over the major sectors of the last 5 days. Look who's at the top. The only group higher last week, materials. I'm glad we started talking about this 2 months ago, because what's interesting is people are starting to catch up. And, it seems that people are waking up to these groups, right? Not a blind cyclical rotation, right? We're not diving into financials and energy. Are you kidding me? But people are actually doing the work. And, you're seeing the bifurcation in the cyclical group, industrials and materials, right? Look who's at the top of the list. Discretionary is kind of interesting because it's not Amazon. Right? Amazon's been under pressure, but the group is holding up. So that's interesting, right? Builders, select restaurants, select retail names. I've seen a lot of interesting names that pop up on screens that I run that are from these groups within discretionary. So that's kind of interesting. Middle of the road, utilities, healthcare, staples, and REITs, and then fins, comms, tech. We know the story of why these are down. Fins are interesting because rates are still under pressure. Tech, obviously, overextended to the upside, working that off. Calm, same story, but energy it's just a disaster. There's no way to sugarcoat it. I wish I could. I want to. It's a disaster. And now you have oil rolling over. So for those of you who have been following our playbook for the past year, you've avoided energy. If you've been aggressive on the short side, good for you. All right, now our industry in focus, NYSE Tech Services, outperformer still, and still very strong. leading the S&P 500 by 20% over the past 6 months. 12-2 bulls to bears. Number 4 has moved down. Now, names you want to look at: JD.com looks interesting to me. VMware, haven't really dug in on, but Intuit, INTU, this is the stock that I featured in my note that I wrote yesterday for our clients, our big weekly note that goes out on Sundays. Take a look at Intuit here. Very bullish stock, strong trend, strong industry, right? So this plays on both my themes. I still like the growth theme. I don't think it's completely broken yet. I think, you need to give it some time to play out, right? So we look at names like Masco. We've talked about some of the chemical stocks in the past, right? So we're playing on that materials industrials theme, but still paying attention over here to these growthier names, right? So here's Intuit, pulls back, right? 360 down to 315, pulls back 300 to 310 level remains key. We're oversold, outperforming, bullish money flow. I think if tech is going to stabilize and the growth trade is going to stabilize, it's going to stabilize from right here. And you want to look for names that could play along. I think Intuit's there. You clear line in the sand. You can set your risk parameters based on your time frame and how aggressive you are. This is a pretty decent trade here. I like looking at Intuit, INTU, as a bullish idea. Let's hit what's trending now. I'm falling a little behind my schedule a little bit. HII, no news. UA increased the size of their restructuring. HWM, no rating for us yet. JP Morgan had a note out. LyondellBasell, LYB, speaking of chemicals, speaking of people catching on to the materials trade, LyondellBasell was upgraded at JP Morgan on Friday morning, sent that stock higher. I am a holder. In full disclosure, IVZ, some AUM numbers were out late last week. On the loser side of the board, Northrop LifeLock, no news. KIM, no news to send it down nearly 4% on Friday, but it was featured in Barron's income investment section over the weekend. Paycom, DRI, AMD, nothing company specific. Obviously, though, a lot of news in the semi space, as it appears that NVIDIA is going to buy ARM from SoftBank. And has anybody been more busy on all sides of the investment landscape than SoftBank over the past few weeks? It would appear not. I just keep reading articles about them. It's fascinating. I don't know what the investment implications are at this point, but they're obviously a gorilla in the room that can make big moves. So when they move, we're going to see it in the markets, right? So we can try to handicap what they're going to do next, or we can just pay attention to the price trends where what they do next is going to show up. So let's just pay attention to the price trends rather than try to handicap. Now let's get into the charts. More importantly, gold, the consolidation continues. Here is continuous front month gold. Back here, it was like 6 or 7 weeks ago. I was going back through my notes. I said, gold is extended to the upside. We like it. Let's not chase it. It needs to consolidate. So hi-yo. We're consolidating here, probably consolidating a little bit longer than I would like, but the market doesn't care what I like. We are consolidating above this 1900 level. RSI holding a bullish range, all while the dollar continues to trend lower. But what's interesting is you have this basing activity now in the dollar here. It's coinciding with the stabilization. So we want to watch the dollar closely, right? I like gold, but I'm not dogmatic, right? If this level breaks down, we could quickly see 1750 to 1800, and that would likely coincide with a breakout in the dollar. So if you're watching gold, if you're involved, pay attention to what the dollar is doing. It's important. Oil, the chart's a little ugly just because of that move back in April, but it is what it is. Price doesn't lie. We don't restate price the way companies restate their financials from time to time. So here's WTI ripping hard. Remember, this is continuous front month, so it's a blend. The actual front month for May got negative. And then we get this quick bat rally, sharp, and then sideways consolidation in the mid 40s, and now we're starting to break down. I think there's scope for this to go to the low 30s. Became oversold, but look at energy, XLE at the bottom, right? Couldn't catch a bid while oil was rallying, and now you have oil falling. Are you kidding me? I think there's a case that can be made that XLE is going back to the March lows. Take a look at that if you trade aggressively to the bearish side of the coin. And then finally, agricultural commodities have caught my interest. DBA, nice rounding bottom above the 50, above the 200-day. The 200-day still declining, but momentum has shifted. Look at the RSI shift into bullish ranges. And check out DBA relative to DBC, which is broader commodities, right? Nice rounding bottom on a relative basis. So that looks interesting to me. That'll wrap us on a Monday. Take us for a test drive. I'll be back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.